We are recording, so here we are, October 2021. It is the October edition of Momi's Monthly Mortgage Moment. When did we do our first one of these? You remember? I have to go back.
Gosh, I think it's been over a year.
I think it's been over a year. I want to say it was probably last summer that we started. So probably like the 15th or 16th edition of this that we've done.
When we realized we weren't coming out of the pandemic in just a few short months.
Right.
Like everybody was saying.
So here we are, October 2021, checking in with Momi Pointer from Arbor Financial, see what's happening in mortgage. We're going to talk about mortgage story. I think we're going to talk about mosquitoes this month, whatever else is relevant. So how are you?
I'm good. How are you, Mike? Good morning, everybody.
I'm good. I'm good. So, and we're on Facebook Live again. We're trying that. I think many more people see this in the recorded version later on, but we are live, so there's no room for error here.
Yeah, and with regards to mosquitoes, they are relevant. They're horrible. Yeah,
I keep hearing about these mosquitoes. People keep mentioning, oh, they're biting through my clothes or biting through my jeans. I'm like, that doesn't happen, but I guess it's this new superhero breed of mosquitoes, right?
Yeah, and they're hard to kill. You chase them around and try to smack them, and but yeah. I will tell you that even the spray, the mosquito spray, doesn't help. So they bite you right through that too. So anyway,
all the crazy stuff going on in the world, and what people don't realize is mosquitoes are taking over.
They are taking over, not cockroaches, mosquitoes. Hopefully it'll be done soon because it is getting colder, right? Yeah. So anyway.
So how are you? What's going on in mortgage?
Mortgage is still alive and well. Still have some refinances. I think from last year, rates are maybe up 1/8 to 1/4, which isn't terrible. So if you didn't jump on the refi bandwagon last year or take cash out because money's still cheap, you still have an opportunity to do that, to jump on the bandwagon, and maybe your rate will be 1/4 point higher than it would have been, if you had done it last year. So that's what's going on with mortgages. And then, purchase business is still, even though I think year over year, that 13 or 14% less homes or less purchase transactions. But that's just because of supply and demand. There's still not a lot of supply and there's still a lot of demand. I have noticed, and you're the realty part of it, a little bit of not a slowdown, but my clients are not having to offer $30,000, $40,000, $50,000 above to win. Right. Depends on the property, obviously. But there aren't as many offers, and we're getting, our offers are getting accepted, and there are still homes on the market, for people to view, first-time home buyers. So, purchase business is still really brisk.
Sure. Yeah. I mean, inventory is certainly very low, still low. There is less, the statement can be very misconstrued, but there is less demand now than there was back in the spring and into the early summer. And by that, I think you really talked about it. A listing that 4 months ago, 6 months ago, would have had 15 offers, 20 offers. A lot of times now, that same listing might have 3 to 5 offers. And it's not getting bid up as much, but of course it's coming to market $30,000, $40,000, $50,000, $75,000, depending on, its actual price point, higher than it would have been 3 or 4, 5 or 6 months ago. So, I mean, the listings that are coming on the market now, those sellers are realizing the benefits of the price appreciation that we've already seen throughout this year, especially in the spring and into the summer. So
it's been 20%, right? Yeah,
we've put a few. It depends on it depends on what stat you're looking at and what area, but 15, 20%, somewhere in that ballpark.
Yeah, that's huge.
That is big. Yeah, that's very big. We've had a few new listings we put on the market here the last 2 weeks. We had one $40,000 over list price, cash offer, 7-day close. That was great. We had another one. We had a really solid cash offer, but it was like just right at list price. So it wasn't a big, and we had another offer and there was another potential one coming. We could have driven the price up a little bit more on that one, but that wasn't, it was a very solid offer, the cash offer, and that was just important to the seller, and it was,
to get it done.
So
Yeah.
But yeah, so it's a little bit easier for buyers now than it would have been back in April, May, June timeframe into July timeframe. As far as it's not going to be, a lot of times it's not as competitive. It's not as crazy with double-digit multiple offers. Not seeing that nearly as much.
Right, and I think we've also seen a slowdown because that time of the year is when everybody wants to get in the home when their kids are either out of school and getting ready to start school, because then it's easier to move during the summer. So they kind of build that time frame in.
Yeah, I mean that's the big time of year, but here, Orange County in Southern California, we do have a 12-month year-round real estate market. So we're not quite as seasonal as
Pacific Northwest.
Well, yeah, I guess Pacific Northwest because of the rain, but yeah,
or
certainly the Northeast, the Midwest, anywhere where there's snow. So
yeah,
but yeah,
we are lucky that way.
Yeah. Now you talked about rates a little bit ago, and they might be a little bit higher than they would have been if somebody refied a year ago or so. So over the last year and a half, what was the absolute low point of rates? Would that have been like around this time last year? Would that have been like back in like January, February? Weren't they super low? Like when was the absolute bottom point of rates?
I would say the absolute bottom. So the pandemic started March of 2020. Rates were still a little bit higher, and I would say summer or maybe even fall of last year is when it got really low.
Yeah.
I don't feel that they were as low in starting out the year 2021. They did take a little click down, but I think they were about the same as they were in 2020. Analysts are predicting, and I apologize, I did not listen to the commentary this morning, but analysts are predicting a purchase market next year. I don't know if you're hearing the same, Mike. Again, you're the realty part, you might know better, but they're also predicting that there might be another refi boom end of next year into 2023. So rates are again an eighth to a quarter point higher than they were last year at their lowest point, right? And if you don't do it now, if you don't capitalize on it now, you might have an opportunity to capitalize on it 2022, 2023, or you will have gained even more equity, right? As the year progresses and values appreciate. And maybe then you're ready to do those renovations and take a cash out. Take a cash out refi or consolidate debt. I'm doing that for another borrower right now. I'm paying off all their credit card. They have a ton of equity, paying off all their credit cards, their first and their second, and lowering their payment, saving them almost $1,000 a month. That's when I get very excited about, my business, because I'm helping them tremendously. Right. So that's exciting.
So the question or follow-up question I wanted to ask you is if rates were at their low point last fall, do you see them getting back to that point? Like, would you count on them getting back to that point again?
Well, I wouldn't count on anything because we don't have the magic crystal ball.
Right.
But like I said, they are predicting that there's going to be another refi boom 2022, 2023. So that tells me they're going to get back down to those points.
Interesting. Okay.
And I think a lot of it has to do with, I think what they're predicting is a lot of it has to do with the inflation. You and I have talked about that many, many times over, right? And the supply chain demand. You see the cargo ships out. Well, I don't know if you see them, but when you drive on the PCH, you see all those cargo ships out there. Recently took a flight there. It's like the whole bay is dotted with all these ships, and they're massive.
Yeah.
And I think that they're saying that by 2022, 2023, that's all going to start emptying. There won't be as many cargo ships. We're going to start seeing movement in the supply chain, and inflation won't be as much of a concern, right?
Right.
And so then the rates may come down.
Gotcha. At the same time, I don't know if you saw, I think it was Goldman Sachs that came out with the forecast for real estate home prices to go up another 16% next year. So
2022. Wow.
yeah,
Well, and that goes, one of the things that we didn't mention, or maybe we did last time, is, the FHFA, the Federal Housing Finance Authority, always releases their new loan limits, right? And they've released the conforming loan limit, which is now, so right now it's the conforming loan limit for Orange County, and many counties in California, it's 548,250, right? So anything
Yep.
in Orange County above 548,250 is then considered high balance. In other counties, it might mean that 548,250 is where it is, and anything above that is considered jumbo, right?
Right.
So it's now 625, and many lenders are already accepting the 625 nationwide to be the conforming loan limit. So they're already funding at the 625 loan amount.
Wow.
But I haven't seen it released yet for high balance, which Orange County is a high balance county, but I've heard rumors of 937,000.
As
So
the cutoff for high balance?
As the cutoff for high balance, which, holy moly, Mike, that's huge.
Yeah.
But then again, look at what the average price. I have a lot of first-time home buyers right now buying 1.2, 1.3, 1.5 million, because that's what a home right now in Orange County as a first-time home buyer costs.
Yeah.
So 937, it's all relative. I mean, to you and I, that sounds like, oh my gosh, I never would have thought it would be 937.
Yeah.
So, for conforming high balance, and then anything over 937, 938 is considered jumbo. But I mean, that's pretty big.
Yeah.
So if you, again, like last year, I had a lot of borrowers on the fence with, they wanted to refi, and I told them, let's just wait until the until the conforming loan limit gets released. And sure enough, they were at that right now it's 822,375, right? They were like 830, or no, I'm sorry, a little under 8, and it got released, and they were now high balance, and now got a better rate. Because high balance tends to be a better rate than jumbo.
Yeah. But for some perspective, like you said, like, wow, 937, 938, like that seems huge. But then, you said, oh, well, but, really with the average price of a single family home in Orange County, it makes sense. And then you think about it, like 937, 938 $1 million is not what it used to be. Like, it's not what, and I don't even mean just in the realm of home prices, just in general. It's not, I mean, they just, last week or early this week, they came out and announced the Social Security benefits increase for next year. It's 6% or 5.9%. It's not like it's going up 2%, 3%, 1.8%. I mean, it's going up 6%.
Substantially more.
Yeah.
Yeah.
So that's just, you mentioned inflation before. This is what happens when you have inflation. So.
Yep.
Yeah.
It is.
So buy something like the best thing you could do is own real assets when there's inflation going on. Real estate and other real assets. Best thing you could do is own that stuff.
Yeah, absolutely. Especially with the values appreciating the way that they are. I mean, I have a lot of clients come to me and they've been searching for a year, and they think, oh, if we woulda, shoulda, coulda, right? Oh, we should have bought that $600,000 home last year, or we should have stayed in the game. And now that $600,000 home, if you tack on 20%, is now 720. I had a client in Chino Hills. They were looking at a property that was, I think, 850, last year, or maybe 8 months ago. And now it's almost $1 million. It's like 950 in price. Yeah. So, and maybe your income maybe you haven't gotten a raise to adjust for the inflation. And so your purchasing power is still at that lower amount rather than at the higher amount that these prices are going up, right?
Yeah. Well, that's the worst part about inflation, is that incomes, especially, wage or hourly rate base, and, that kind of income does not keep up with inflation typically. So, I mean, inflation really hurts people. Like, it's not a good thing overall.
No.
But when you own real assets, you have put yourself in a much better situation.
Yeah, absolutely. Yeah, it hurts people at the gas pump. It hurts people at the grocery
Yeah.
store. It
Yeah.
hurts people all the way around.
Yeah, and it really hurts I mean, the more moderate income, the renters, the lower class, it really hurts them the most, actually. So it's
Yeah.
kind of, it's really unfortunate. It's really unfortunate.
At that point, it's a matter of, do I put food on the table or do I drive to work?
Yeah.
Or do I pay rent?
Yeah.
Those are the choices that have to be made when you're in that level, right?
Yeah. So, okay. So you were telling me a story about a borrower that came to you.
Yes.
I'll let you take it over from here.
Okay, cool. Thank you. So I was referred to a borrower by another client, another borrower who I've also pre-approved. And when this borrower called me, they had started the process of getting pre-approved 7-8 months ago. And the loan officer at the time, ran their credit, and there were some credit challenges on there. And the credit score was a little bit low to where they couldn't start the purchase process. And that loan officer told them, his advice to them was to file bankruptcy. That was the advice of a loan officer to first-time home buyers that really wanted to get in the market, was to file bankruptcy, because he took a look at their score, he took a look at their credit, and decided that that was the advice he was going to give to them.
That's essentially legal advice, by the way.
Legal or illegal?
Right.
Yeah, probably, because he's not a BK attorney, right? He's not licensed to.
Right.
That's like you quoting rates, right?
Well, or I couldn't give somebody, if I told somebody that as a realtor, I would be, could be a DRE issue. It's certainly a violation of our realtor code of ethics. So I don't know how it works on the mortgage side with your mortgage license, but overall, it's not. What's that?
It's just as strict, Mike. The NMLS license, we're regulated and governed by NMLS and CFPB, and we have to be so careful what we say. For the same, even if we advertise a rate, we have to have our NMLS number, we have to have an APR, we have to have all that stuff. And if you don't, you get fined, and it's a $10,000 fine per time, right? Yeah. And it can happen very often. So it's just as strict. So, if we want to call it illegal advice, it's, in my mind, first of all, I was horrified when they told me that.
Yeah.
In my mind, that is not advice that anybody should give a first-time home buyer. And for me, that person is somebody that's more worried about like a transaction, getting a transaction done and getting paid out on it,
sure.
right?
Yeah. Somebody who does not care at all about that borrower.
The person, right? The borrowers, absolutely.
Right.
So, and that's the whole point of this story is I really take more of an advisor role. If they had come to me 7 months ago and I saw the challenges, my advice to them would be, okay, it's not now, but it's going to be a matter of when, and let me help you get to the when. So I would have referred them, and we talked about this offline. It's, we have to have the resources for our clients, because a lot of times they don't know where to go. So I have resources where if you have credit challenges, or if you have a creditor that you have a dispute with and you can't deal with that creditor, I have a credit repair specialist company. I have a couple that I work with that really help my clients get from a 500 FICO score to a 680 or a 700 or whatever the scores are. It could take 3 months, it could take 7 months, it could take a year, but they do a great job at getting those clients to where they need to be for, the credit score. So that would have been, my advice to these borrowers is, okay, we can't do it now. We can do it later, but let me help give you some connections of people that I know that are successful with other borrowers of mine, where they can help you. I would not have told them to file BK. BK would have completely derailed them.
Yeah.
BK would have make, they would have had to wait 2 years to do an FHA, right? I think it's 2 years or 3 years. Actually, it's been a while since I've even looked at those guidelines, and maybe 3 or 4 to be able to do a Fannie Freddie.
Right.
That would have been 2026 or 2025.
Right.
That would have completely derailed them. I mean, but they actually started the process.
Right. It would have derailed them on the mortgage, plus all of the other consequences of that too. If they need, if at some point they need to buy a car, they need, I mean.
So actually, let's talk about the car. That's
right.
a very interesting thing. They ended up buying a car a few years ago, and because of the credit challenges, they kind of got stuck with a very high payment, right?
Right.
So when I was talking with them on our initial conversation, and we were talking about what we could do to improve and what we need to do, they were thinking of refinancing their car. And they asked me, should we go ahead and refinance, or should we wait until after we buy? And my advice to them was absolutely refinance, because it will lower your payment. We're not ready to buy yet.
Yeah.
And so if you close out that loan and open a new loan, it might drop your score a little bit, but we're 4 to 6 months away from being able to purchase it. Your score will recoup in that 4 to 6 months, but your payment will be lower. So that's a really good thing, So again, taking the advisor role of having the client ask me, hey, I'm going to make this. I've even had clients say, hey, I've got this large deposit that I need to put in. Should I deposit it now or should I wait? That's the kind of advice that we need to give our clients to make sure that we don't derail them if they're in a transaction. But yeah, it would have had other consequences. Did I say that they started the process? They actually did start the BK process.
They started filing for the BK, and they didn't get far enough where the court granted the BK yet, right?
No, they realized that maybe they didn't have enough debt, and it was all old.
Right. So here's a question for you that I don't know the answer to. So by starting the process, did that create any credit event there by even starting the process, or does it not happen until the court grants the BK?
It would, the credit ding would not have happened until the court granted the BK and it became public record. That's when it goes on your credit report. So starting the process didn't at all. I mean, so you could look at it one of two ways, right? Positive or negative. You could say, oh, that LO scared them to the point where they decided, okay, let's tackle our credit challenges, right? Maybe we do need to file BK, and they started thinking about it, and then they decided they were going to tackle their credit challenges. And they did. They tackled it, and they've raised their credit score by over 100 points in the short 7 or 8 months, just by doing it on their own. It can be done on their own.
Right.
I would have recommended the credit repair specialist who might have had the same success, but not as much work on their part, because they would have dealt with the creditors. So you could look at it that as the positive, but the negative is that kind of advice should never been given out.
Right.
In my mind, as far as I'm concerned, legal or illegal.
For sure. For sure. Yeah, that's something. So the moral here is Momi cares. So, no, but seriously, a lot of times people, some people have a pretty good handle on their credit situation. Other people don't have a good handle on it. Other people maybe know that they have credit challenges, but that's all they know, and they're afraid to look at their credit or really dive into it because they just think it's a mess and it's scary. And I guess, it certainly can be. So sometimes the best thing is just to get with somebody like you and kind of look at it and, come up with a plan, really.
Come up with a plan. Our job is to help give solutions for our clients to come up with a plan, right? It isn't just, oh, I can't do your transaction and move on. And you hit the nail on the head. There are some borrowers that when I run their credit, they don't even know what's on it. I'll give you a real quick, for instance, ran somebody's credit. She wants to refi. Somebody had not stolen, but had hacked her Macy's account and charged thousands of dollars on the Macy's credit card. She didn't even know because this person was so slick and changed the address of where the statement goes. She
Gotcha.
never got the statement.
Sure. Yeah, and
That's
it's
pretty.
not like her regular credit card. It's her Macy's card that she probably never uses. Yeah.
She hadn't used.
Right.
So of course, when I ran the credit, the score was really low because the payment was in arrears for 5 months.
Sure.
Right. And she never got a statement, didn't even know. And so it's been a month, but 30, 45 days, we finally now have the letter from Macy's and I can do the rapid rescore.
Yeah. So what was involved with that and getting that cleaned up? Do you know?
She had to call Macy's and find out it wasn't her charges and find out, what it was. And, the state, the address had been changed. And so she fought with Macy's and Macy's said, okay, they're not your charges. We will delete all of the delinquent, the delinquent verbiage and delete all that from your credit report. But I'm still going to do the rapid rescore.
Right.
So now it's a zero balance. The credit card has changed the address. I mean, she was pretty angry and she was going to close it. And I told her, no, don't close it because that will completely drop your score. That's another thing people don't realize when they pay their credit cards, sometimes they'll just close them and that actually will plummet your score.
Right.
Sometimes 50 points.
Right. Right. Because then your total available credit has gone down. And
Yeah. Exactly.
Sorry about this, by the way. Can you hear this?
No.
No? Okay. Never mind it. Gardner.
Is it construction still?
No. Gardner.
Oh, Gardner.
Yeah.
Sorry, I didn't hear what you said.
So
yeah, that's the moral of the story. And Mike, you and I have transacted many first-time home buyers and many home buyers. And just from the reviews that I've gotten posted on my Google business page or my, findamortgagebroker.com.
Yeah.
I think that from our borrowers and from talking to them, I do care. I want to make sure that I provide, good customer service and answer all their questions.
Yes. Yeah. No, I mean, and that's why we always feel comfortable introducing our clients and our buyers to you, for sure.
Yeah. And it's much appreciated. Yeah. But I mean, truly, I do care.
Yeah. Yeah.
Think about it. Like we've talked about before, this is the largest financial transaction our buyers will probably ever make in their lifetime, right?
Right.
They're not going to buy a $500,000 car or $1 million car. Now we're up to $1 million.
Right?
I
don't know if this inflation keeps going. They might in a couple of years.
And live in it.
Their car might be, more expensive than the house they buy right now.
Yeah, and live in it, right? But so when you think about it from that perspective, it's not just buying a home; it's a lot of money. You want to make sure that our clients understand the payment, understand what they're getting themselves into, making sure that they're within their budget, making sure that they understand what every fee is, what every payment is detailed, is made up of, and what a down payment consists of. I had a client the other day who is a buyer and she said, wait, I thought the seller paid all the closing costs.
Right.
No, the seller does pay some of them and you pay some of them. So again, that's like a myth out there. The seller pays everything.
Right.
No, you have closing costs too.
Yeah.
So anyway.
Yeah.
That's my story for the week, for the month.
Good story. So to recap, Momi cares, mosquitoes are taking over. Interest rates may or may not go down lower than they are right now at some point in the future.
Yeah.
Right?
Yeah, they may or may not.
Okay. And with that, we'll see you in November. All right. Bye, everybody.
Bye.